Bitcoin is worth now 31.5 ounces of gold per Bitcoin. And we are only 8.9% of gold's market cap. If Bitcoin is to equal gold, that implies a Bitcoin of over $1 million. If Bitcoin is the better version of gold, the digital version of gold, the future's gold, we have millions and millions of dollars worth of Bitcoin, tens of millions of dollars worth of Bitcoin. The established sequence: gold moves up, it outperforms Bitcoin for weeks or months while BTC quiet or drops. 2, gold's outperformance over Bitcoin begins to slow and then reverses. 3, Bitcoin catches up and vastly outperforms gold and other assets. If this gold BTC cycle plays out like previous ones, we've entered number 2.
Bitcoin now trades at the value of 31.5 ounces of gold, yet it's only 8.9% of gold's total market cap. That gap won't last forever. If Bitcoin simply reaches parity with gold, the price targets over $1 million per coin, and all indicators show we're heading there. That's the latest message from Jack Mallers, CEO of 21 Capital and Strike. As global liquidity returns and trust in fiat systems erodes, capital naturally gravitates toward the hardest, most verifiable asset. Gold once held that position, but Bitcoin now fills it more efficiently. Portable, divisible, and impossible to debase. Mallers points out that every major liquidity cycle since 2012 has followed the same pattern. Gold moves first, then Bitcoin multiplies its gains several times over. With supply tightening and institutional adoption accelerating, he argues that Bitcoin's revaluation isn't years away, but is already in motion. Make sure to stick around until the end of the video as Jack Mallers explains why Bitcoin's next leg could mark the beginning of its move toward $1 million. Before we jump into it, just a quick reminder, only a small percentage of you watching are actually subscribed. If you're getting value from the videos, hit that subscribe button. It's free, it supports the channel, and you can always change your mind later. Now, here's Jack Mallers with his latest outlook.
First chapter, the charts don't lie. Okay, this chart from Charlie, guys, it speaks for itself. It speaks for itself because I hear all these people on the internet, they say, well, didn't Bitcoin not necessarily outperform Ethereum if you clicked on the chart here and then there? Or wait, what about that one time Dogecoin went up a lot? Listen here, okay? Listen here. You want to prosper? You want to have family? You want to be able to afford a home? Stop listening to TikTokers. Stop doom scrolling with all the low testosterone out there. To all these day traders driving Lamborghinis telling you they know how to pick stocks at the perfect moment. Wake up, touch grass, look at this chart. Bitcoin returns from 2010 to 2025. That's a 15-year track record. 15 years. Look at this chart. Holding Bitcoin, you've had 3 red years of 15. People ask me, dude, how do you do it? How do I do what? Win so much? That's what you want, you want to ask me a question? You're going to ask me how I just do green, 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 green. Look at that. 9,900%, 1,400%, 186%, 5,500%, 35%, 125%, 1,300%, 95, 301, 66, 156, 121, 27%. The king, the fastest horse. I'm telling you, the charts don't lie. This next one, gold, which is up 48% year to date, Bitcoin up 31% now, are the top performing major assets so far in 2025. We've never seen these two in the number 1 and the number 2 spots for any calendar year. In the 15 years Bitcoin has been around, gold and Bitcoin have never been 1 and 2. I'm going to say that again. Gold and Bitcoin have never been 1 and 2. What does that imply, guys? This is the new monetary era. I see all of these finance bros on all of the social medias. You got all these social medias where you got all this opportunity to spew all this nonsense. And they say, oh, you see that? You got some dude in an empty closet ranting about Bitcoin. This is the top. Who the hell is that? He must be in his mom's house. Yeah, okay. This is the end of the beginning. We are just getting started. And if you don't want to listen to me, that's fine. You can click on a different YouTube video. But I've been right for 13 goddamn years. Bitcoiners have been right for 15 years. You can no longer ignore the charts. The charts are the truth. And if you've got gold and Bitcoin leading for the first time in the asset's history where they've been operating together, that screams fiscal dominance. That screams fiscal emergency. That screams a new monetary era. That is a rotation out of the US dollar and US assets, guys. I cannot put it any clearer. I cannot put it any clearer. The charts do not lie. And I fully expect Bitcoin to rip and surpass gold as the top performer this year. Okay? Let's get into that. The established sequence. This from Macroscope, which, by the way, one of my favorite follows on Twitter. If you do not follow him at Macroscope17, he is an absolute gem. The guy shoots like 99.9%. I don't know who he is. Unbelievable legend. Also loves El Salvador and all the work that I've done there. The guy's unbelievable. Unbelievable. Shout out Macroscope. And with this tweet, of course, he's right. The established sequence. Gold moves up. It outperforms Bitcoin for weeks or months while BTC quiet or drops. 2, gold's outperformance over Bitcoin begins to slow and then reverses. 3, Bitcoin catches up and vastly outperforms gold and other assets. If this gold BTC cycle plays out like previous ones, we've entered number 2. We've entered number 2. You guys know this has been my belief as well. And it's not a belief like a religion. It's not a belief like a bias. It's a belief because of experience, guys. I've lived this. This is the data. This is why this chapter is called The Charts Don't Lie. You got to deal in objective reality, right? Look at the data. Look at the numbers. Do the math. That's all this all is. Wait, how much debt do they have? Okay. Wait, how many more Bitcoins can we print? Oh, no more? This is it? Yes, right. Number go up. It's math. Objective math. Next, the fiat debasement trade goes mainstream. Okay? Trump came out and said, you grow yourself out of debt. What does that mean? We're going to run it hot. There's going to be no austerity. There's going to be no magical Elon cuts and Doge. There's going to be no magical other countries are going to pay our bills through tariffs. We're going to grow ourselves out of this debt. That means we're going to print the money. We're going to run the economy hot. Real rates are going to be negative. That means Bitcoin is going to the moon. That is what we are seeing. Guys, when you see stuff like this, growth out of debt, that means inflationary. For all my Gen Zers out there, that means buy Bitcoin. That means their inflation is coming back. They're going to have to run it hot. They're going to have to print more money. They're going to drive the prices up of these things. Make sure you get yourself some Bitcoin, okay? Bloomberg wrote U.S. gold hit $1 trillion in value. With gold reaching record highs, the U.S. gold stockpile has never been worth more. And I thought it was very notable that Bloomberg wrote this piece. But this is the type of shit, guys, where people are saying, oh, well, this must be the top. Bloomberg is writing about how high gold is. Gold's going to crash now. It's been going up for too long. It's like 3 straight months of green gold. Oh, this is the top. Did you see that all the... No. Want to know how I know? This is the market value of U.S. official gold as a percentage of foreign held U.S. treasuries, U.S. debt. Guys, we're at the bottom. Tops in gold are when the market value of U.S. gold is like 40% of foreign held U.S. treasuries, or 60% of U.S. held treasuries, or 125% of U.S. held treasuries. So if gold were to go on to hit $40,000 an ounce, okay, yeah, it might be a top, because the percentage of gold reserves relative to foreigners owning our debt would make sense.
The data doesn't lie. 15 years of market history show Bitcoin as the dominant performer of the modern financial era. But something absolutely unprecedented is happening right now. For the first time, gold and Bitcoin, both born from distrust in government money, are rising together. This is a confirmation that the global economy is shifting away from faith in fiat and back towards scarce, verifiable assets. Mallers explains that this alignment is a transition. Gold always moves first, absorbing the early wave of capital fleeing inflation, and then Bitcoin takes over, delivering exponential gains as liquidity floods in. That cycle appears to be repeating right now. Gold's momentum is slowing, Bitcoin is consolidating, and governments are once again turning to debt and money creation to mask stagnation. When that happens, history shows what tends to happen next. The fiat debasement trade goes mainstream.
The reason I know that gold is not at an all-time high, or not at a top, it is at an all-time high, it's not at a top, is simply because if you look at the gold value relative to the debt situation, listen to me clear, guys. This is what matters. It's all relative. I know that we're not used to things going all-time high after all-time high after all-time high after all-time high. But this is the new normal. The dollar has to crash. It has to go down against assets. The debt is out of control. The post-1971 dollar is dead, guys. In 1971, the U.S. government divorced themselves from the gold standard, divorced themselves from having to have any relationship with Mother Nature. You know, back in the day, you couldn't print dollars because you couldn't print gold that backed it. But now they can. They started that in 1971. It was an unsustainable situation, and it's just unraveling. We're just getting started. Look at this chart. This implies that, yes, the U.S. government's gold position is now worth $1 trillion. It could grow to $10 trillion. It could grow to 20, 30 trillion. They could grow their way out of the debt, like Trump said, where the gold on balance sheet is worth 20 trillion. The Bitcoin on balance sheet is worth 20 trillion. Now, what is a dollar worth in those scenarios? No, the dollar's probably not getting you much gas. It's probably not getting you much food. It's probably not getting you much housing. But Bitcoin and gold will, for sure. Sats will get you what you need, for sure. For sure. For sure. Right? You guys picking up what I'm putting down? De-dollarization accelerates. If gold reaches roughly $5,500 to $5,700 an ounce, all else being equal, it will overtake the dollar as the world's largest reserve asset. Tokenization will further enable gold's integration into the global trade and finance. Gresham's law. The dollar's monopoly is ending, guys. I don't know how else to put it to you. And people think that we can do so. Back in 1980 to 2000, Paul Volcker, he was able to slam on interest rates, so hike rates up, and really pause what was becoming an explosive gold rally after the 1971 divorce from the gold standard. People think that we could go back to that. People think that we have a variety of tools in the toolkit that, oh, gold is running away. Oh, Bitcoin's running away. Oh, stock market just keeps hitting all-time high after all-time high after all-time high. They're not going to let this happen. This is the top. Sell before the next FTX bust. Guys, listen, I'm not here to say what's the top, what's not. You guys know I don't trade. I stay humble. I stack sats. I'm not here. This isn't a trading show. Fuck that. Sorry. Just not me. Hard work, principles, morals, family, health, humble, stack sats. Okay? I just buy the Bitcoin no matter what. I wake up every day. I work hard. What's the best place for me to store my hard work? So far, it's been Bitcoin. I'll wake up tomorrow. I'll make that same decision. So I'm not here to call tops. But what I will tell you is this. Mainstream media, the greater West, majority of America, Europe, the West at large, they do not appreciate that an existing chapter is closing. The game has changed. I'm telling you guys right now, the game has changed. The gig is up. Okay? We need to start thinking in relative terms. Gold is becoming the largest reserve asset in the world. Gold is not even 20% of foreign held U.S. treasuries for gold on the U.S. balance sheet. Bitcoin is only $2.5 trillion. Bitcoin is still worth less than certain companies like NVIDIA. We are not even close. The beginning is ending. From CNBC, the retail investor crowd has a new trade it is chasing. It's fueling Bitcoin and gold rallies. They literally published that the debasement trade is Bitcoin. The bank is in reference to Chase Bank. The bank defines it as a trade that, quote, reflects a combination of factors, which in our client conversations range from elevated geopolitical and policy uncertainty to uncertainty about the longer-term inflation backdrop to concerns about debt debasement due to persistently high government deficits across major economies to concerns about Fed independence to waning confidence in fiat currencies in certain emerging markets in particular and to a broader diversification away from the U.S. dollar. This is Chase Bank reported by CNBC about how the debasement trade has gone mainstream. Things like inflation, debasement, these are common knowledge terms. And let me explain, because I recently learned that a lot of younger folks, Gen Z, listen to the show. And maybe sometimes these terms or these ideas aren't super well understood because at the end of the day, it is a lot of hocus pocus garbage. And it's a lot of unnecessary complication, this financial system. So here's the deal. If the U.S. government is in debt, which we all know they are, unsurmountable amount of debt, ridiculous. Like no one thinks they can pay it back. They know they can't pay it back, right? So the U.S. government's in $37 trillion worth of debt, okay? Now, typically, for a normal person like you and I, anyone who's in debt has two options, only two. One, they could pay it back like an honest person. If I'm in debt, $20. I can pick up the phone and say, hey, where do you want to meet? I got your $20 I owe you, right? Pay it back. My second option is I can default. I can pick up the phone and say, hey, I don't know if you're ever going to want to talk to me again. I'm so sorry. I know this is going to impact our friendship, but I'm defaulting on the $20 I owe you. I simply can't pay it back. Those are the two options for any normal person when they're in debt. What you guys have to understand is that the U.S. government uniquely has a third option, unique to them, because they can print what they owe. You understand? They can devalue what they owe. And time again, we know the U.S. government cannot afford to pay it back. We mathematically know they can't. We've walked through the economics on this show. They also cannot default. They can't pick up the phone and say, guys, in fact, a default would actually be the most bullish case for Bitcoin. If the U.S. government said the dollar's dead, we're moving on to something else, Bitcoin would go to $1 million tomorrow. The only option, if it's a multiple choice, the only option they have is to print what they owe, to value the debt.
Bitcoin's latest volatility is exactly what Jack Mallers calls a repricing regime. After hitting an intraday record near $126,000, its price started to fall as headlines about the US government shutdown spooked traders. Profit-taking and forced liquidations followed, but beneath the noise, long-term holders and institutions kept accumulating. Gold even pierced $4,000 as capital rotated between the two hard assets. The same gold to Bitcoin sequence Mallers has described for years. Meanwhile, Bitcoin ETFs saw $3.2 billion in inflows this week, and Ethereum ETFs $1.3 billion, pushing total crypto ETF assets near $200 billion. Now, these aren't retail pumps, but long-term institutional bids anchoring the market. Inside crypto, capital rotation continues. BNB up nearly 46% this month shows liquidity is spreading, not fleeing. Maller's thesis is unfolding in real time. Gold rallies first, Bitcoin follows, and as fiscal pressure mounts, digital scarcity wins. If you want to stay ahead of these signals and know exactly when the market's heating up or when it's giving you those rare buying windows, I break it down every day in the Crypto Nutshell, my free 5-minute daily crypto newsletter. It's built to give you quick, actionable insights so you can make smarter decisions without spending hours buried in charts or headlines. You'll get clear signals on when to buy, when to take profits, and the latest news that could move markets, all delivered straight to your inbox. Just click the first link in the description, enter your email, and you're in. Don't pass up the chance to stay updated and make informed choices in the crypto market. Anyway, guys, I hope you all enjoyed today's video and that it gave you some value. I'll see you all in the next one, and as always, all the best.